got Yahoo Finance's own Julie Hyman standing by as Trump administration appointments have been coming fast and furious this week. Julie, what are you seeing?
So the appointments have been coming, and the one that's been getting a lot of attention has been DOGE, right? The Department of Governmental Efficiency, headed up by Elon Musk and Vivek Ramaswamy. We don't know what it's going to do, but we know that its goal is to cut government spending. So I wanted to take a step back and look at government spending and also look at why, in the view of some, that government spending is an issue. So let's break down first and look at what government spending has been. And as you see, it's been going mostly up. We had, of course, this spike here that happened around the pandemic and the stimulus that was pumped into the U.S. economy, then coming back down. But still, the trend line remains that is going up and to the right. So the last fiscal year for the federal government, the spending was around $7 trillion. And that fiscal year, by the way, is October 1st to September 30th. So we're already in fiscal year 2025 as far as the U.S. government goes. So that's the spending that we have seen. Where are the increases in spending coming? Well, the Committee for Responsible Federal Budget took a look at this issue. We know that the bulk of the U.S. federal budget and spending goes to Medicare and Social Security. And indeed, the increases in spending on those programs comes from those two areas as well. Aging of America is one of the reasons why we see that happening. Other health spending as well. Net interest is a very important part as well, where we see that as a growing share of the spending that the U.S. does. Because all of the spending that has been happening isn't just because we have that money lying around in the U.S. We don't collect enough in tax revenue to pay for all of the stuff that we're doing. So how do we make up the difference? We borrow. We borrow through the U.S. Treasury market, both through short-term bills and longer-term bonds. That's where you get the federal deficit. When we bring in more than we spend, we have a surplus. We haven't had a surplus since George W. Bush. And when we spend more than we take in, that's how we get the federal deficit. And that's why you also have the increase in U.S. debt in order to pay for all of the things that the U.S. government does. So when we talk about the cuts to spending, you know, the impetus is at least in part because of all of this. It's also because the right side of the aisle tends to want a smaller government, more efficient government, et cetera. So is this a problem? This is something that Wall Street has really wrestled with for a long time, whether the rising debt to GDP in the United States is going to be a problem for the U.S. economy and markets. Well, Torsten Slok, chief economist over Apollo, the parent company of Yahoo, came out with a note on this very issue this morning. He concludes it's not a problem right now. He says it would be a problem if there was a downgrade of U.S. sovereign debt, of U.S. treasuries, which we have seen in the past. You have to watch treasury auctions. He said if demand was weakening for treasury auctions, that would be something to be alarmed about. The term premium, that is, how much are people demanding in yield to hold longer-term U.S. debt? And finally, he talks about the dollar, and if we see a declining dollar. These are some of the risks and warning signs to watch if the market is getting more alarmed about the deficit. Now, as you know, Brad, I talked earlier in the week at Yahoo Finance investor Rick Reeder of BlackRock, and he said this issue is not the shark closest to the boat right now, as far as the market is concerned, but he says it could eventually be, and that also seems to be kind of the consensus out there.
All right, hate sharks unless it's Shark Week. Then I'm fascinated. Julie, thanks so much. Appreciate it.